Dear clients, welcome to PhillipCapital's Weekly Market Watch. I'm Chen, investment analyst from Phillip Securities Research. Today I'm going to share with you my view on global logistic properties, GLP. GLP is Asia's largest modern logistic facilities provider, operating in 3 markets, including China, Brazil, and Japan. Particularly in China and Brazil, the world's 2 biggest emerging markets, GLP is holding very strong development pipelines. The company has established a fund management platform where it partners with international strategic players to hold, develop, and manage portfolios of logistic properties. As part of the effort to build up fund management platform, on 21st of December 2012, GLP completed the IPO of a J-REIT and has subsequently disposed 33 out of its 68 wholly owned Japanese properties to the REIT. Going forward, the J-REIT will be employed as a vehicle for future monetization of GLP's stabilized Japan assets in order to facilitate financing of projects in high-growth emerging markets, China and Brazil. Now we are going to briefly talk about some of the investment merits of GLP. Firstly, GLP assumes leadership in all the 3 markets where it operates. In China, GLP is over 5 times the size of the second largest player by complete gross floor area. In Japan, GLP is 1.44 times the size of the second largest player. And in Brazil, it is 1.09 times. But at the same time, it is holding very strong growth pipelines. Therefore, GLP would benefit from the economy of scale, as well as the leveraged network effect on its customer base. Secondly, the supplies of modern logistic facilities are scarce in all the 3 markets. In China and Brazil, the supplies of logistic facilities per capita are respectively 14th and 16th that of US. And for all the 3 markets, including Japan, most of the existing market supplies are outdated and may not meet the increasingly higher standard required by industries. So we are seeing expanding demand for GLP's high-quality logistics services in the long term. Thirdly, domestic consumption trends in China and Brazil are favorable for logistics business. China has sustained a retail sales growth rate of over 15%, even in the worst time of the financial crisis. While for Brazil, the average growth rate of retail sales volume was over 8% for the past few years. Key risks of GLP include foreign exchange risk, especially the yen depreciation, which would shrink the valuation of GLP's Japan asset. In addition, a weaker than expected economic recovery in China could result in soft leasing activities, therefore cutbacks in the company's development start. We use RNAV method for GLP valuation and estimate the financial year 2014 target price Singapore dollar 2.77, equivalent to a 1.13 times forward PB ratio. The rating is neutral. For more details on GLP, we encourage our clients to read our GLP reports published on 4th and 7th of February. That's all that we have for you this week. Do stay tuned to next week's video. Thank you.